Start.
Hello, everyone. Thank you for joining us. Today, we'll be talking about, what is our research methodology? What are the investment styles that we carry while making our portfolios? What is our investment thesis? We at Wealthtrust Capital Services are extremely excited to bring about our strategies and our investment thesis to you. Very quickly, I'll just get into an introduction of who we are. So we are a wealth management boutique firm and a SEBI RA. And under the RA license, we operate on small case, curating portfolios. At the moment, we have 5 live portfolios on small case. 3 of them have been around for more than 2.5, 3 years, with a very consistent performance. Just a little bit about me. I'm Sneha Jain, and I have more than 15 years of experience. And we manage 500 plus clients on our wealth desk. Plus, we have more than 2,500 subscribers on our curated portfolios on various platforms. We manage more than a 200 crore AUM on our wealth desk again. The analyst team is, other than me, who is the CEO and the founding partner of the firm, we have with us Shubham Jha, who is also on the call today. Shubham is the senior research analyst and looks at the overall offering on our Wealthtrust Capital Services research desk and equity portfolios. He is the brain behind our portfolios, and he is, assisted with an exceptional team with Parth and Jeel, who also manage various sectors and bottom-up strategies that we look at. So they are analysts associates actually within the team. And we have another 2 people on the research team assisting us with further sector and macro assistance. This is the service suite that Wealthtrust Capital Services offers. So we have a research desk under which we do fundamental and trading. And we also do MF research. So we have 3 verticals within the research desk. And we have a macro outlook as well. So we have someone just covering macros. And we have a wealth management desk, which is just on holistic wealth management. So what is it that Wealthtrust really caters to, or what is it that Wealthtrust gives? So what we are always doing is actively searching for opportunities to invest. So we start with a very top-down approach. So first, what we see is the macro things where we look at sectoral trends. We figure what within the overall macros, we look at global and domestic macroeconomics. Within that, we then evaluate what are the sectors which will be the sectors for the next 3, 5, 7, 10 years from a domestic perspective. And within those sectors, then once we have figured the sectors out, we then get into business quality. So we are very sector agnostic. It's not like we only cover 2, 3 sectors. We are sector agnostic, but we definitely look at macro trends to figure what are the sectors for the next 5, 7 years that will do really well and have great investing opportunities within the equity desk. Once we are done with the sectoral analysis and the macro analysis, then the analysts start looking at business quality, meaning then the approach is more bottom up. So once we've done the top down approach, our approach becomes more bottom up, where we look at what is the quality of the business that we are investing in. What is it like for us? A business quality takes more importance than going for stocks which may do well in a particular time of the market. We are very, very focused on fundamentals of the stock. So any stock that we take in our portfolio has backing of research within our analyst, where we have a very, very in-depth thesis on the bottom up, whether, the fundamentals are good, whether, the quality of the portfolio is good, the company is good, the management is great. So we do look at those factors, the earnings growth have been consistent. We do look at these factors when eventually, finalizing the stock within the portfolio. And definitely the other thing that we look at within the bottom up is market trends. So there are some stocks which are great from a quality perspective. Everything is right, the management is correct, the earnings have been good. But when we look at the market trends, that sector has been not performing, or it's been, not been taken up by, the investors, or the DIRs, FIRs, interest is not there. We definitely look at market trends, whether there is interest in that sector as well or not, so that the portfolios do follow that logic, whether, the market trends look positive, etc. So that is a third level of analysis that we do. And once we've done these three analysis, we of course come to the portfolio construction. Our portfolios are a little more highly concentrated, meaning they are high conviction bets. So they are definitely smaller in size depending on the portfolio you're entering. Once you enter the small case, it can be very highly concentrated, just between 8 stocks to about 25 stocks is the largest we have in a portfolio. So they are definitely high concentrated bets, but bets which are quality, very, very quality driven, and market trend driven. Also, most of our portfolios are, of course, skewed to mid and small cap. All the small cases that we run are largely on the mid and small cap. So we are looking and scouting for opportunities which can be the large caps of the future or the mid caps of the future. We definitely look at emerging opportunities, opportunities that have lesser coverage, that are lesser known stocks. So most of our portfolios will have quality companies, but which are not being yet seen by the market, or something that the market has not noticed yet. So it is definitely those neglecting the small caps and emerging mid caps where our analysts focus their energies on. And for every curated portfolio or every curated small case, we do have research reports, which are very, very detailed research reports as to why we have invested in the stock. So we definitely get into very detailed analysis on the quality of companies that we select. What is our core investment thesis? So here I would like to, bring your attention to, how once we have, of course, the core investment thesis is to look at quality companies and market trends. But for any stock, any stock to be added to our small case or our portfolios, they need to have these two important themes within it. So we look at stocks which are very growth oriented, which will be the future of, in 3-5 years, we expect these stocks to do really well, but have an underlying momentum. So most of the companies within our portfolios are growth plus momentum. So good companies, focused on sectors and sectors which will do well, and then bottom up, but they have to have underlying momentum within the stock for it to get selected within the stock portfolio. So the portfolio will only have companies which have a growth plus momentum. 80% of the portfolio is designed that way. We look at, so when we are doing our emerging, or when we are scouting opportunities, what our main thesis is to look at very, very holistic approach. So as I said, we merge the top down and then get into bottom up strategies to identify very promising stocks. We analyze the macro trends for the direction of the market, and then zoom on potential sectors where again within the small and mid cap, which could become gems of the future. Our coverage at the moment is about 60 small and mid cap stocks, and we expect to keep expanding this coverage of stocks to about 100 plus stocks. And our team of about 4 or 5 analysts really analyze these stocks in depth, given all of these parameters. We have a very focused expertise. So the team is very well divided between what sector one will cover and what macros one will cover and who is doing the bottom up. So it's a very well divided team. That's why we're able to make the maximum of it and have our portfolios continuously perform and do well over a period of time. Now, what do you gain, right? What happens to you? Of course, from the platform, what you get is what our motto is. A lot of portfolio management services or this direct equity access is usually from broking firms or from PMS houses. But this is your chance as an investor to be part. So we want to get to as many retail investors to be part of good direct equity access, where we are scouting the same way how a large organization would do, scouting opportunities in the same way, and you have access to this in a portfolio method where the conviction where we go on to for high conviction bets. So you have access to smaller curated portfolios, which you will not get anywhere else, right? So this is something that is our motto, to reach to as many retail investors to really participate in the India growth story, but be in companies and stocks which will be or pave the future path, which is very, very and that's why it's so well researched and you get access to that. Know what masses don't. So of course, mid and small caps, as I said, they are less covered. So you will not have as much access to information or will be able to delve deeper into why this stock versus this stock within each sector, each segment, and that's where we come in. So you get access to a lot of things which probably you will not get access to otherwise. And of course the costs are minimal because of economies of scale. The cost on the curated platforms are fairly reasonable. What we offer currently, so we have 3 segments within our research piece. Is one is fundamental, where we look at companies which, just one second. Yeah. So current offerings are fundamental research. So as I said, all our companies are good quality companies. We definitely look at fundamental analysis, meaning they are companies having good earnings growth. They are companies with good management. They are companies with lower debt. So all these are very important factors in figuring out the good fundamental companies. We definitely do look at valuations also when it comes to the segment, but valuations on a relative basis, because it doesn't matter what the P is of a firm, as long as at a relative basis we find it attractive. So we definitely look at these factors during our fundamental research and strategies to figure our fundamental research. We definitely also look at technicals because we go for momentum strategies also, because it's a mix. We definitely look at technicals when analyzing a stock. So the main core offering is fundamental, but we also do look at technicals to ensure that what we want, the growth plus momentum investment strategy, is fairly met. And that's how we do our technical research. On technical research, I would like Shubham to add a few lines on what is it that we look at the technical side.
Yeah. Yeah, thank you, Sneha. That was a great explanation. Firstly, I'll add something more on the fundamental research part. So, basically our approach to fundamental research is built on three pillars. The first one is top-down analysis, the second bottom-up, and the third is, we evaluate the quality first evaluation companies. So in top-down analysis, top-down analysis always help us identify, the promising sectors. And once we realize that, okay, these sectors, may perform well in the coming quarters, we do start doing the bottom-up approach, and where, individual stocks are filtered out based on, rigorous qualitative or quantitative analysis. And the third one is the most important part, which is business quality. Companies with strong fundamental and effective management, always help for the longer period of time. We start doing researching about the management. We do, we visit the plants and we understand the business, efficiently. And overall, our research predominantly focuses on emerging mid-cap and small-cap space, because, these segments are often hold immense potential and are not in the lot of coverages, because these are very micro and small-cap companies. So we believe, that this creates significant opportunities for long-term investors to capitalize on, undervalued assets or undervalued sectors. Then after doing fundamental research, we jump into the technical part. In technical analysis, the main focus is on the liquidity tracking, because we think that the companies which don't provide a lot of liquidity, DIs and FIs won't jump into it. And in technical analysis, we need momentum. So without momentum, there's no gain for at least 1 to 2 years. Yeah, obviously, if you're looking for more than 2 years, that would be the reason for fundamental. But when you jump to a company because of technical analysis of momentum, you need liquidity. And second important thing is, the downside and the upside. Before entering to any company, we analyze that what's the upside and downside risk. And the third important thing is the fundamental insights. Whichever company we jump into, right, whether it should be technical analysis or macro trends, we focus that this company should be fundamentally back, or has a good underlying asset. Until unless we don't see the fundamentals are good, or the market cap is not very small, or less than 500 crores or 300 crores, we really don't jump into it. We see that FIs or DIs are interested in those companies. After those things, we analyze each and everything, and then only we jump into any company.
You want to take up macro research as well?
Yeah, I'm okay with that.
So as we said, we are very focused on the macro approach of things at our fundamental analysis side, and I'll let Shubham take that also.
So yes, as we discussed, right, Sneha also said the same thing, that whenever we choose a company, we see the macro side also. Recently, we have seen that the RBI has just kept the repo rate unchanged. This indicates that macro trends is the most important part. If for example, if interest rates are falling, right, financial stocks might perform better. By staying updated on these trends, we can see which sectors could be the huge, there could be a huge upside and downside. So for any sectoral trend, we need to understand the macro aspects of it. And the main focus before choosing any company is macro research. And we really, our team focuses much on macro trends, and then we start doing, the bottom research.
Okay. Now what we'll do is, I'm just going to present my screen again. 1 minute. Now we're going to move into each strategy that we run on small case, and we're going to talk a little bit more about that. So a few of our core packs, we've actually put in all the 5 small cases that we operate on. So one is the multi-dimensional portfolio. Now this is a portfolio which is largely into mid and small caps, and it is a portfolio with just about 7 to 8 stocks. What we look at in this portfolio is growth. You want to take this, Shubham?
Yeah, I'll take it.
Thank you.
Okay, yeah. So let's talk about the multi-bagger portfolio, multi-dimensional portfolio. So this is one of our standout small case strategy. This is a very low churn portfolio, meaning we don't do frequent rebalancing. This is a very high growth and momentum driven companies. So this portfolio typically includes 7 to 8 companies, each with the strong growth potential. But what truly set this apart is its diversification. When the market dips, this portfolio tends to fall less than compared to the broader market because of its balanced asset allocation. So the asset allocation is the the core thing in this portfolio. Now the beauty of this momentum approach is when the market recovers, this portfolio bounce back faster than the most. So if you will see, the charts of the multi bagger portfolio, whenever the market has recovered, it has beaten the market in the shorter term as well as for the longer term period. So this makes it incredibly effective in the volatile market condition like today, right? The market's been very volatile. If you will see the market condition in the last 1 month, the market has fell by 10%. Now it has again came up by 4-5% up. So in this volatile market where the trends has been very confusing, asset allocation or the balance approach is the most important thing for any small case, not only multi-bagger. But if you have your own portfolio, you need to understand that the asset allocation or the companies which has the balance approach would always help you in this type of condition. Yeah, if there is a bull run or is a bear run, then the approach could be different. But when there's a volatile market condition, this type of asset allocation or multi-bagger portfolio itself is a very good option. And our ideology is very simple: focus on the growth, leverage momentum, and ensure that stability through the diversification. So this approach has consistently helped us drive the better results, providing it sustainability on both from the momentum side as well as from the growth side. And this smart exposure has helped us perform better compared to other players.
And within the strategy, all the stocks follow this kind of approach where it's basically all growth stocks. So basically, the earning growths are very, very consistent. They are low debt companies. Their debt on the books is very low. The management is very experienced, though they are small and mid caps, but these are very experienced management within that segment. So if it is a X firm, within that segment, the management will be very, very an excellent management and has capex plans. So of course, the companies that we are scouting for has growth plans. Of course, there will be higher capex, but yet are managing with lower debt. And those are the companies that in a bad market or in a volatile market, as Shubham mentioned, in the last 1 month where we have had extreme volatility, because it's a very well hedged portfolio and well balanced portfolio, and the asset allocation has played out really well, we've been able to be afloat, and we have not fallen too much. And when the market actually bounces back, we'll actually move back much quicker. And as we said, we rebalance only 4 to 6 times a year. So it's a very low churn portfolio with good quality stocks. And it's not on a fixed schedule. It is a little ad hoc, our rebalancing, but it is only 4 to 6 times a year. So these are very high conviction bets. And we have showcased the times we have rebalanced this.
Right.
Yeah. And the segment composition, if you want to again speak on that quickly.
Yes.
You're able to see my screen, right?
Yeah, I can see this. So basically, as Sneha said, right, we are only concentrating on 7 to 8 companies. So whenever people have asked us that we need momentum, but we don't need a lot of churn, right? Because whenever you do momentum, if any small case or in any portfolio, everybody needs to do the rebalancing at least for a month. In a month, they will do the rebalancing to gain up the momentum. But this portfolio which we have made is we focuses on those sectors which will play out for the next 3 to 4 months. For example, if you'll see, we have also picked up FMCG foods, or we have also picked sectors like investment banking. We realize that this sectors has a little bit more momentum compared to other sectors like private banks or metal companies, right? And then we shift our weightage on those sectors, and when we realize, okay, the sectors has played out and coming 6 months or 8 months, then we just cut down the weightage on those sectors. So this has really helped us because eventually we don't want to do churning every month, because a lot of investors don't have a lot of time to churn it every month, because it also consists a lot of cost and everything, right? So we have realized that churning won't help us. We will focus much on the sector specific call. We will cut down to the sector specific thing, not companies each and every month. So this would be the same strategy we will do for the next 2 to 3 months, where we will focus on the sectors which are going to play out for the next 3 to 4 months, and this will eventually help our portfolio grow.
Okay. Now, coming to our second core strategy is value multi-cap equities. So this is a flexi-cap approach, which has large, mid, and small. And we do flex between the market caps depending on again, depending on which market cap is more attractive than the other one. So this strategy is based on these three approaches, which again, Shubham will get into.
So the value multi-cap portfolio, is a little more about flexi-cap approach, combining stability of large cap, growth of mid cap and small cap. It's a very low churn portfolio. If you'll see right from the last 1 year, we have only rebalanced 3 or 4 times. So this indicates it's a very low churn portfolio, and the focus here is on investing in high quality companies at reasonable valuation. This businesses has a very strong fundamentals, strong growth potential in attractive prices. We have studied each and every company in a very detailed part. We have also spoken to some managements. We have been tracking those companies very closely from past 5-6 years, and finally at the end, after tracking those companies from 5-6 years, we have finally invested and pick those companies in this portfolio. So we are very confident with the companies. It's not about we will change, if we have 14-15 companies in this pack, we are going to change 8 companies in a year. It's not going to happen like that. Yeah, 1 company, 2 company in 3-4 months you could see those things, but not like other portfolios. We are not changing 10 companies, 12 companies in a year, because we are very confident with the companies which we are holding. If you will see the segment composition, right? Can you go down?
Yeah.
So as I said, we have 15, 16 companies, and we are well diversified. If you'll see, we have already invested in power transmission, hospital, then FMCG, private banks, heavy electrical equipment, iron steel business supports. So what happens when, for example, if you'll see, right, currently FMCG is facing some issue because of the inflation thing, right, in the rural side. So at this point of time, textile industries could perform well, or the battery segment has a lot of upside. Stock exchanges and other, for example, BSE and CDSL, they are at their all-time high. This indicates that whenever one sector is underperforming, the other sector help us to grow this portfolio. So if you will see the performance chart, right, in the last 6 months to 1 year, this portfolio is beating the value multi-cap, or else if you compare it to the liquidity large cap, in a huge margin. The reason only been because we are the segment competition is being divided into different sectors. They are also into paper industries, iron and steel. Paper and industries were struggling from last 8 to 9 months, but we see that okay, now there could be a a U-turn for this sector. And then we add those companies, by, as I said, right, these companies aren't research for 6 to 7 months. We have been tracking it from 5 to 6 years. But when we see the valuations are at the right price and at the right value, right, we pick out those companies with the sector analysis. So segment competition is our main focus in each and every pack. Let it be the multi-dimensional, or value multi-cap, or the balance 25. The asset allocation, the segment competition will help you to grow your portfolio, as well as it will save when the market falls.
Correct. Also, I'd like to add a disclaimer here. Any stocks that we mention in our presentation, we may or may not have holdings within that. Please do not take these as stock recommendations. Now, this is another portfolio that we have curated as a small case. It's called Trend Blend. What we do here is take a fundamental plus technical approach to portfolio management. Again, I will request Shubham to tell us a little bit about this portfolio.
So trend and portfolio is all about sector rotation and momentum. This one is perfect for those who love riding the wave of excitement in the markets. Because our investors, they have already invested in multi-bagger and value approach, and they've got an idea that these portfolios are a bit less churn portfolios, and as a good they can create wealth in the longer period of time. But this portfolio is designed for an aggressive traders who are looking to capitalize on the sectors that are moving the most. What make trend blend unique is the frequent rebalancing. So in every 15-20 days, or at least in a month, in a month we do rebalancing. Unlike other portfolios that stick to a fixed strategy, we adjust this holding based on the market condition. So for example, I'll give an example where we took a cash call of 20-30%, right? The reason being very specific, we realized that the market could, correct. And as I said, right, this is not a fixed strategy. Whenever we see there's a momentum in the market, or there could be a downside, we come up with a cash strategy, or we buy something else based on the market conditions. So unlike like other portfolios, there's no fixed strategy in this. This is a pure momentum play. This is for an aggressive traders who like trading, or who likes to do rebalancing each and every month, or in a week basis. This rebalancing happens on a need basis. So to capture a high momentum, as I said, right, there's no fixed date about rebalancing, or as I said you, right, after 1 month or 3 months, there's no fixed date. It's totally about need basis. So if you're someone who enjoys the fast pace of the market, and isn't afraid of volatility, trend could be a great fit for you. But remember, this strategy requires active monitoring and quick decision, because it's not like that because this is a momentum based strategy. When we choose a company, there could be a chance that the stock could run up within a month, within a week, right? And if you aren't taking those opportunities, or if you are missing those opportunities, there could be different return expectation from our side and your side. So you need to be very active when you do, or you choose this portfolio. But yeah, I'm very pretty sure that if you are an aggressive trader, who are looking for this, for the market volatility, you want to capture some good gains, then this portfolio is a perfect fit for you.
तो ये पोर्टफोलियो में बेसिकली द वे हमने ये क्रिएट किया हुआ है, ये ऐसा पोर्टफोलियो है जहाँ पे आपकी एक्टिव रिक्वायरमेंट बहुत इंपॉर्टेंट है। क्योंकि अगर आप एक्टिवली इसमें नहीं, आप इतने एक्टिव नहीं हो विद इन योर इन्वेस्टमेंट जर्नी, तो ये पोर्टफोलियो आपके लिए नहीं है। और ये पोर्टफोलियो वो लोगों के लिए है जहाँ पे जिनको 20-30-40% टेक्निकल यू नो मतलब वो प्रोफाइल ऑफ इन्वेस्टर्स के लिए है जहाँ पे आपको 20-30% का टेक्निकल स्टॉक्स आपके पोर्टफोलियो में अच्छा लगता है। सो दैट इज व्हाट this portfolio would do for you, and it needs active management and it needs your active support.
Right. And स्नेहा, एक रीजन ये भी है, बिकॉज if अगर आप दूसरे पोर्टफोलियोज देखोगे, राइट, तो 15-16 कंपनीज है, तो उसमें हमने क्या किया है, 10 to 12 डिफरेंट सेक्टर्स में हमने वेटेज शिफ्ट किया है। तो वेटेज जो होते हैं दूसरे पोर्टफोलियोज में बहुत कम होते हैं, बट ये पोर्टफोलियोज में वेटेज बहुत ही हैवी कॉन्सेंट्रेटेड है। तो इफ अगर क्लाइंट मिस आउट कर देते हैं हमारे कॉल्स, और द रीबैलेंसिंग मिस आउट कर देते हैं, तो वो जो हैवी वेटेज पोर्टफोलियो, वो बहुत पोर्टफोलियोज को ड्राइव करते हैं। सो इसलिए जो भी क्लाइंट्स है, उनको एक्टिवली रीबैलेंसिंग करना इंपॉर्टेंट है, एंड श्योरली वो आपको आगे हेल्प करेगा।
ठीक है, अच्छा, मैं एक दो क्वेश्चंस ले लेती हूँ बिफोर वी गेट इनटू हमारा नेक्स्ट स्लाइड। व्हाट इज द एज ऑफ दिस स्मॉल केस? अगर आप प्रदीप, आपने ये क्वेश्चन पूछा है, अगर आप मुझे बता सकते हैं, बिकॉज हमने अभी क्वेश्चन देखा है, कौन सा स्मॉल केस की आप बात कर रहे हैं, अगर आप वापस चैट में डाल दें तो हम आपको बता सकते हैं एज क्या है। इधर हमने एज लिखी हुई है, ट्रेंड प्लान 10 महीने का है, वैल्यू मल्टी कैप 2 years हो चुके हैं, इसको 2.5 years हो चुके हैं एक्चुअली, और हमारा जो मल्टी डिमेंशनल है वो 8 महीने का पोर्टफोलियो है। तो अगर आप वो पूछ रहे हैं तो मैंने आंसर दे दिया है। डू वी फॉलो टॉप डाउन अप्रोच? हाँ, हम टॉप डाउन अप्रोच फॉलो करते हैं, पर इसमें एज आई सेड, हमारी जो इन्वेस्टमेंट थीसिस है वो है टॉप डाउन, बट फिर एट अ स्टॉक लेवल बॉटम अप है। तो हम स्टॉक लेवल में टॉप डाउन नहीं देखते। इसका मतलब क्या हुआ कि अगर हमने सोचा है कि चलो बैंक्स बहुत अच्छा करेंगे इन द नेक्स्ट 6 months, तो ऐसा नहीं है कि हम सब बैंक्स ले लेंगे सोच के कल चलो सेक्टर मूव हो जाएगा तो बैंक्स भी मूव हो जाएगी। बट हम डेफिनेटली बैंक्स को देखेंगे, पर उसमें हम बॉटम करेंगे, और शायद 1-2 ही स्टॉक विद इन बैंक्स हम सिलेक्ट कर पाएंगे बेसिस द बॉटम अप स्ट्रेटेजी। सो ये हमारी लार्जली हमारी स्ट्रेटेजी है। Then how do you ensure the portfolios adapt to changing market conditions without over trading? Shubham, if you can just put a little words here.
Sorry, what was the question, Amma?
The question is, how do you ensure the portfolios adapt to changing market conditions without over trading?
So as I said, right, segment composition बहुत important है। अगर market conditions change, और if for last 1 to 2 months, right, markets has been corrected by 10%, तो वो टाइम पे हम क्या करते हैं, हमारे जो पोर्टफोलियोज में जो सेगमेंट कॉम्पोजिशन है, हम लोग ने 10 to 12 डिफरेंट सेगमेंट्स में इन्वेस्ट किया हुआ है, या वो कंपनीज हमने बाय किए हुए। तो अगर कोई एक सेगमेंट डाउन साइड में जाता है तो हम लोग को दूसरे जो सेगमेंट्स, जो पॉजिटिव सेगमेंट्स है, वो हेल्प आउट करते हैं कि हमारे पोर्टफोलियो को ड्रैग ना कर पाए। बट ट्रेंड प्लान में अगर आप देखोगे तो हम लोग 6 to 7 सेक्टर्स में इन्वेस्टेड है। यहाँ पे वॉलिटिलिटी ज्यादा होता है। तो अगर आप इसके चार्ट देखोगे तो लास्ट 1 मंथ में इसने भी ड्रैग डाउन किया हुआ है। रीजन वेरी स्पेसिफिक, बिकॉज 6 to 7 सेक्टर्स में ही इन्वेस्टेड है। सो वैल्यू मल्टी कैप और मल्टी डायमेंशनल और बैलेंस 25 में सेगमेंट कॉम्पोजिशन बहुत ही वेरिएड है, और डिफरेंट डिफरेंट सेगमेंट्स में इन्वेस्टेड है। तो अगर आप ऐसे इन्वेस्टर हो जिनको ज्यादा रिस्क नहीं लेना और ज्यादा एग्रेसिव नहीं होना है, सो मल्टी डायमेंशनल और वैल्यू मल्टी कैप एक परफेक्ट फिट है। बट अगर आप ओके हो कि नहीं, चलो अगर मार्केट अगर आप एक्सपेक्ट करो कि मार्केट अपसाइड जाएगा या थोड़े टाइम में मार्केट अच्छा मूव करेगा, तो ट्रेंड वहां पे आपको हेल्प करेगा। तो एज एन इन्वेस्टर आपका कैसा रिस्क है वो आप फाइनलाइज कर सकते हो।
थैंक यू। अब हम आते हैं बैलेंस 25। सो दिस इज ऑल्सो वन ऑफ आवर ओल्डेस्ट पोर्टफोलियोज। ये 2.5 years हो गया। दिस वॉज एक्चुअली वन ऑफ आवर फर्स्ट पोर्टफोलियोज। इसमें बेसिकली हम 25 स्टॉक्स लेते हैं, एंड आई विल अगेन लेट शुभम टेक ओवर कि हमारी स्ट्रैटेजी क्या है।
Balance 25 is a portfolio, designed to focus on sector leaders. So this strategy is very simple, and it's still very effective. We pick top performing companies across multiple sector to create a portfolio that's both well diversified and resilient. The idea is to reduce risk by spreading investment across sectors and focus on the best player in each space. So हम लोग इसमें क्या कर रहे हैं, जो भी sectors के जो best players है, नॉट मोनोपोली कंपनीज। जैसे ही मैं बेस्ट प्लेयर्स बोलता हूँ तो लोग एक्सपेक्ट करते हैं कि वी आर चूजिंग कंपनीज विद मोनोपोली, राइट। हम लोग मोनोपोली कंपनीज नहीं पिक कर रहे हैं, हम वो कंपनीज पिक कर रहे हैं जो नेक्स्ट लीडर्स बन सकते हैं, जो आने वाले टाइम में वो सेक्टर्स के नेक्स्ट लीडर्स बनेंगे। हम वो कंपनीज पिक करते हैं जो कि मिड कैप एंड लार्ज कैप में सिचुएटेड है, नॉट वेरी माइक्रो और स्मॉल कैप। सो अगर आप इसके वेटेज देखोगे सेक्टर स्पेसिफिक में, सो 50% इज क्लोज टू large cap companies, and then we are into mid cap companies 20 to 30%, and then 20% is only small cap companies. So any portfolio, any person who thinks that the large caps could be the next leader, और अगर वो ज्यादा रिस्क नहीं लेना चाहते और वो चाहते भी कि उनके जो पोर्टफोलियोज के जो कंपनीज हो वो नेक्स्ट लीडर्स हो, सो बैलेंस 25 एक परफेक्ट फिट है। Because as I said, right, we don't pick monopoly companies, we pick the companies which are going to be the next sector leaders or the top leader. Second thing, as I said, this is also multi sector approach, जहाँ पे we also have 50% large cap, 30% mid cap, and 20% small cap. And as I said, right, we have a huge team जो opportunities continuously ढूंढते रहते हैं। अगर उनको लग रहा है कि नहीं कोई large cap में ही है जो कि और better कर सकता है, right? Because if a company, अगर वो large caps पे if the company is a large cap player, growth, people expect that growth और नहीं हो पाएगा, because it's already a large cap, उतना fast momentum से growth नहीं हो पाएगा, इसलिए people prefer small cap and mid cap. But if we realize that no, the valuations are still very good at the current market, right, many of the large cap companies valuations are very attractive, so then we are not afraid to choose or add up more on the large cap side in this portfolios.
और इसका जो वॉलिटिलिटी भी रहता है, दिस पोर्टफोलियो स्पेशली, इट प्रीटी मच हग्स दी बेंचमार्क्स। सो आपका जो निफ्टी 50 का वॉलिटिलिटी रहेगा, वो ये पोर्टफोलियो हमने देखा है वो उसको हक करता है। सो यूजुअली अगर मार्केट जितना गिरता है वो उतना गिरता है, और इट डज फॉलो द मार्केट ट्रेंड, बट डेफिनेटली डज बेटर देन द मार्केट। सो इट
Right,
डज फॉलो द वॉलिटिलिटी ऑफ द मार्केट इज व्हाट वी आर ट्राइंग टू से, राइट?
right.
Now coming to our last small case that we have is inflation resistant. इसमें हमारे पास है 3 एसेट एलोकेशन। सो लार्जली हमारे चारों जो स्मॉल केसेस है वो ओनली इक्विटी लिंक्ड है, बट इसमें हमारा है इक्विटी, डेट एंड गोल्ड। और इसमें हम कैसे वो एसेट एलोकेशन को भी मूव करते हैं, वो भी हम अभी आपको बताएंगे। एंड दिस स्मॉल केस इज अगेन 2.5 years ओल्ड। सो इसमें भी हमारा काफी हिस्ट्री ऑफ परफॉर्मेंस भी है।
Right.
Yeah. Shubham, you can talk about the strategy.
So, as Sneha said, right, inflation-resistant portfolio is all about protecting your wealth during the tough time. So, अगर आप इसके charts जाके check करोगे तो जब भी there's a war condition in the economy, और कभी भी inflation issue की वजह से markets में huge sell off हुआ है, वो time पे inflation have always beaten the market. because this is built according to the hedge against the inflation, because we have seen that whenever there's a huge crash, this 8%, 5% is okay. I mean, this could be handled with, as I said, segment competition. But when there is a huge crash like Russia Ukraine happened, right, then in the US inflation crisis happened. At that period of time there was a huge crash. What type of inflation resistant portfolio has always beaten the market. सो तो जो भी हमारे पोर्टफोलियोज है, राइट, मल्टी डायमेंशनल हो या ट्रेंड ब्लेंड हो, हर एक पोर्टफोलियो हमने एक स्पेसिफिक कंडीशन की वजह से बनाया हुआ है. दिस पोर्टफोलियो आल्सो इंक्लूड्स अ मिक्स ऑफ गोल्ड, डेट एंड इक्विटी. So I'm very happy to tell you that 50 to 60% is of gold and debt, and the rest remaining 30 to 40% is only equity. So a person who, if you have 100 rupees, right, and if you are afraid to put down all 100 rupees in equity market, then you can, keep 10 to 20 rupees aside for this type of portfolios, where 50 to 60% is in gold and debt, and the rest remaining 30-40% in equity. So इससे क्या होगा, आपको थोड़ा इक्विटी का भी एक्सपोजर मिल जाएगा, गोल्ड का भी एक्सपोजर मिल जाएगा, डेट का भी एक्सपोजर मिल जाएगा. एंड आप पास्ट हिस्ट्री में जाके चेक कर सकते हो कि जब भी एक वर्स्ट क्राइसिस आया हुआ है, एज आई सेड, वॉर कंडीशंस आया हुआ है, वो टाइम पे दिस पोर्टफोलियो हैज ऑलवेज परफॉर्म वेल. So gold act as a safety net, debt provides stability, and equity delivers growth. So making this portfolio well-rounded solution. So yeah, that's it.
Okay. So Abhi, now what we are going to do is, this is all from a presentation wise. Of course, we do write monthly outlooks. You can always reach out or subscribe to our monthly outlooks, which gives you a lot of market dynamics, etc. And for our small cases, now there are some questions which I'll quickly take up. Do you take cash calls in your portfolios? Shubham, you may want to answer that quickly.
Yeah, as I said, right, we take cash calls in Trendband, as we discussed recently, 3 or 4 months before, when we realized that 1-2 months before, when we realized there could be a sell-off in the market, we take cash calls very aggressively. There could be 20%, 15%, something like that. But we are happy because, as we said, we are very confident about our approach, about our research, because it's totally well backed by our research team. We take cash calls in balance 25 and multidimensional. We have not taken cash call as of now, because the segment competition is huge. But in trend blend, where segment competition is very short, in those type of portfolios, yes, we take cash calls.
Great. Okay. Are you concerned about global economic uncertainties and geostrategic crisis? So I'll just take that briefly, and then Shubham can add. Yes, we do look at these things. As we said, we are very macro-driven also. But for macroeconomics, we will leave away. So see, market will be volatile, but we will not just sit on cash, or we will not make our strategy conservative, because each small case is based on some thesis, on some some of our investment strategies. So we are not going to pull back because we have a geopolitical issue or something. We may just adjust our asset allocation or sector allocation accordingly, or we may take a cash call for a brief period. Again, we will not sit on cash for very long. So yes, we do take all these things into account, because we are macro driven, because our first starting point is top down. Want to add anything?
No, I mean,
that's good. Okay. Market is down from its peak. Is it a good time to invest, or should one wait? So there is no waiting in the investment world. I think you should invest whenever you have the money or the time. And market is down, so it's the best time to invest. All you can do is, probably if the investment is 10-20 lakhs, you can stagger it, with putting some money now and some over a few months, because we do see three months of volatility in the market at the moment. But yeah, I would say that you should not wait and time the market, because that is our job to do, actually, to pick up stocks at the right time. So leave that on to us and our superb team here. Yeah. You want to add anything, Shubham? Okay. So what is the age of the small case, and do we follow top down? I already answered from Pradeep and Suresh. Which is the best small case for super long term with around 30% CAGR, safely and consistently. We cannot comment on the expected return as such, but what we can tell you is if you're looking at a long-term investment, investment portfolio, if you're okay with a very high conviction bet, of course, it will be a multi-dimensional portfolio. And if you are a very conservative investor, Shubham, what would you suggest?
Value multi-cap is a good choice.
Okay, value multi-cap will be something that also that you can consider. And if you're, of course, something where you want asset allocation, we have an inflation resistant as well. Which one to consider as high risk small case out of the five?
Trend.
Trend blend is the high risk small case that we have because it's based on fundamental and technical, and it is the sectors are composed, meaning there is high sectoral allocation. Thus, do you offer PMS services? No, Niket, we are not a PMS firm. We are a RA. We do at a stock level and research report level. We do consult with family offices and clients like that. You can always reach out to us from our number at the small case site, and we can take it from there. And these are small cases are really good. If you are looking at something which is more PMS friendly, I think our multidimensional pack is something on those lines. Which is the best small case for the FMCG stocks, Neha ma'am? Vinay RK is asking us. For FMCG stocks, so we have some, of course, we have FMCG. Shubham, I would like you to answer this.
In FMCG, we have two small cases. The first one is multi-dimensional, and the second one is balance 25. But as I said, right, multi-dimensional I mean, the weightage matters a lot. In balance 25, we have a very small portion of weightage in the companies in FMCGs, but in multi-dimensional we are a little bit more heavy weighted. So as per your risks, you can choose any of those.
Okay. And do you invest in unlisted stocks and US stocks? I think I will just say that unlisted, we cannot even invest through a small case. So no, we do not invest in unlisted stocks. And US stocks, also we don't invest in. So I think that's it at the question side. If you may have any more questions, happy to take it, or thank you for joining. We had a great time explaining our small cases, and you all can always reach out to small case or us for any further questions on our small cases, or write to us. Okay, then we'll thank you everyone for joining us on a Saturday after, morning, and hope to catch up again soon. Okay.